What if the world's biggest oil crisis could be solved not by war, but by negotiation? Right now, behind the scenes, powerful mediators are working nonstop to bring the United States and Iran back to the negotiating table. And this could decide the future of oil prices, global markets, and even your daily cost of living. Welcome to the Financial Factory. According to U.S. officials, mediators are working vigorously to restore talks between Washington and Tehran. This comes at a very critical moment, because the current ceasefire is fragile, temporary, and could collapse at any time. ABC 7 Chicago. Just days ago, high-level talks between the United States and Iran ended without any agreement after nearly 21 hours of intense negotiations. The biggest disagreement? Iran's nuclear program and control over strategic regions like the Strait of Hormuz. ABC News. Now here's where things get serious. This is not just a political issue. This is a financial time bomb. The Strait of Hormuz handles nearly 20% of the world's oil supply. If tensions rise and negotiations fail, oil supply could be disrupted instantly, and when oil supply drops, prices explode. That means higher petrol prices, higher transportation costs, and rising inflation across the globe. But here's the twist. Despite failed talks, both the United States and Iran are still showing interest in continuing negotiations. Mediators, including countries like Pakistan and others, are trying to push both sides back into dialogue before the ceasefire expires. ABC 7 Chicago. This shows one thing very clearly. Both sides understand the financial consequences of failure. Let's break this down from a market perspective. If talks are successfully restored, oil supply stabilizes, market confidence improves, stock markets recover, inflation pressure reduces. But if talks fail, oil prices could spike dramatically. Global markets may crash or become highly volatile. Investors will rush towards safe haven assets like gold and the US dollar. And emerging markets could face serious economic pressure. This is exactly why global investors are watching the situation very closely. Now let's talk about the deeper issue: trust. The biggest challenge between Washington and Tehran is not just policy, it's trust. Both sides are accusing each other of violating agreements and making unrealistic demands. ABC News. From the US side, the demand is clear. Iran must not develop nuclear weapons. From Iran's side, the demand is also clear. Respect sovereignty and lift sanctions. And this gap is what makes negotiations so difficult. But here's the interesting part. Even though talks failed, mediators believe there is still a chance for a deal. Some sources say both sides are under pressure because the ceasefire deadline is approaching fast. ABC 7 Chicago. That means time is running out. Now think about this from a financial strategy perspective. When uncertainty is high, markets behave differently. Investors reduce risk, move money into safer assets, and wait for clarity. This creates volatility, and volatility creates opportunity. Short-term traders may benefit from price swings in oil, gold, and even crypto. Long-term investors, however, need to stay cautious and diversified. Because geopolitical events like this don't just create temporary noise, they can reshape global economic trends. Now let's look at the bigger picture. And this situation is not just about the United States and Iran. It involves multiple global players, including regional powers and mediators, all trying to prevent a full-scale economic and military crisis. If negotiations succeed, it could stabilize not just oil markets, but global trade routes and financial systems. If they fail, the impact could be massive, from energy shortages to rising inflation and slowing global growth. And that's why this story matters to you, because whether you're an investor, a trader, or just someone paying for fuel, this crisis directly affects your money. Right now, the world is watching one question: will diplomacy win? Or will the markets face another major shock? This situation is still developing, and the next few days could be critical. Because in today's world, geopolitics doesn't just shape headlines, it controls financial markets. Subscribe to the Financial Factory for more deep financial breakdowns. Because we don't just report news, we explain what it means for your money.